Right now, someone with your exact salary is quietly building a $1 million fortune without breaking a sweat. Meanwhile, you are probably losing money every single day without even realizing it. What if I told you that everything you know about investing in 2026 is completely wrong? Welcome to the single strangest financial market in modern history. This year, the rules of the game have been entirely rewritten. But the so-called experts are praying you never figure it out. They want you confused. They want you paralyzed by fear. Because your hesitation is exactly how Wall Street pays for its yachts. But today, we are going to break that cycle forever. I am going to show you exactly what to do if you are starting from absolutely nothing today. But I must warn you, the truth might actually make you angry. Stay with me until the very end, because the final step will completely change how you view your bank account. Let's start with a harsh reality check. Your money is slowly dying in your savings account. Inflation is eating away your purchasing power while your bank pays you pennies. You are literally paying a storage fee to become poorer every year. That is not saving. That is financial sabotage. So, naturally, you think about jumping into the stock market. But then you look at the news. Everyone is screaming about an impending crash. Valuations are through the roof. A handful of tech companies are holding the entire market up like a house of cards. It feels terrifying. It feels like the absolute worst time to invest your hard-earned cash. But here is the secret that wealthy people understand. Waiting for the perfect time is the most expensive mistake you can possibly make. Let me prove it to you with simple math. Over any 20-year period in history, the market has never lost money. Not during the Great Depression. Not during the dot-com bubble. Not during the pandemic. The market punishes impatience and aggressively rewards stubbornness. But wait, it gets even crazier. If you miss just the 10 best trading days over a 20-year span, your returns get cut in half. Half of your wealth just vanishes. And you know when those best days usually happen? Right after the absolute worst days. They are next-door neighbors. The moment you panic and sell is statistically the exact moment before the massive rebound. That is why your instincts are your own worst enemy in investing. But do not worry, I am going to give you an idiot-proof system. A system designed to protect you from your own emotions. Step 1 actually has nothing to do with buying stocks. You must ruthlessly destroy your high-interest debt first. Credit card debt is an absolute emergency. Paying off a 22% credit card is mathematically identical to a guaranteed 22% return on investment. Warren Buffett himself cannot guarantee those kinds of numbers. So kill the toxic debt immediately. Step 2 is building your financial armor. You need an emergency fund. Stash 3 to 6 months of living expenses in a high-yield savings account. Why? Because market crashes love to happen exactly when your car breaks down or you lose your job. Your emergency fund prevents you from having to sell your investments at a massive loss. It gives you the superpower of doing absolutely nothing during a panic. Now let us talk about the only free money that exists in the world. Step 3 is your employer match. If your job offers a 401k match, you must take it. It is literally a 100% instant return on your money. Millions of people walk past this pile of free cash every single day simply because the HR paperwork is confusing. Do not be one of them. Next, we look at the ultimate wealth-building weapon, the Roth IRA. This is where the magic truly happens. You put your money in after paying taxes today. It grows for decades. And when you pull it out in retirement, the government cannot touch a single penny of the growth. You get the entire tree for free. But what exactly do you put inside these accounts? This is the part Wall Street hopes you never learn. Do not pick individual stocks. I repeat, do not try to find the next huge tech winner. The data is utterly devastating for stock pickers. Most stocks historically perform worse than boring government bonds. All the massive wealth in the market comes from a freakishly tiny minority of companies. If you try to guess which ones they are, you will likely fail. Even the highly paid professionals fail to beat the simple market average year after year. So what is the alternative? You buy the entire haystack. You buy an index fund. One simple, boring index fund makes you a part owner of every major company in America. You guarantee that you will always own the winners. And you pay almost zero fees to do it. Fees are the silent killers of wealth. A 1% management fee might sound harmless, but over 30 years, it will quietly consume a quarter of your entire life savings. Yes, you heard that right. Hundreds of thousands of dollars lost to a tiny percentage. This is why you must ignore the financial advisors pushing expensive mutual funds. They are not working for your future. They are working for their own commission. If you want the absolute easiest path, just buy a target date index fund. It automatically adjusts itself as you age. It is a self-driving portfolio. Set it up once, and it does all the heavy lifting for the rest of your life. Now, how do you actually execute this without losing your mind? You automate everything. Automate the transfer on the exact day your paycheck hits your bank account. Do not rely on discipline. Discipline fades when the market gets scary. Automation is immune to fear. When prices drop, your automatic contribution buys more shares on sale. When prices rise, your portfolio balance goes up. You win no matter what the headlines say. But you might still be thinking that you do not have enough money to start. You think investing is only for the rich. That is the biggest lie of all. Your early returns hardly matter at all. What matters right now is your savings rate. Building the habit of investing $50 a month is more important than finding the perfect stock. Because the person who automates $50 today will automate $500 when they get a raise. You are building the muscle. The compounding engine takes time to warm up. The first 100,000 is notoriously brutal to achieve. But after that, the math goes completely crazy. Soon, your portfolio will generate more money in a year than you do working your full-time job. You just have to survive the boring phase. And remember the promise I made at the beginning? The final step that changes everything. It is preparing for the inevitable crash. A 30% drop is not an anomaly. It is the cost of admission to the greatest wealth-building machine on earth. So make a contract with yourself today. When the market bleeds, you will do absolutely nothing. You will not check your app. You will not read the doom-scrolling news. You will just let your automated system buy the dip quietly. That is how you win the game in 2026 and beyond.